What's up guys, Kevin Cage here with another crypto update. We have a bunch to dive into today, so let's kick it off. First up, we have Web3 Hub in Davos with the WEF that's going to be taking place in January. So we have Casper right here, we have State Street, SDX, we have 21 shares. Remember, they have the XRP exchange traded products with millions of dollars in AUM. Citibank, NASDAQ, Visa, Signum, Swissborg, etc. So it looks like it's taking place on January 15th to the 18th, and then the speakers were just recently put out as well. So under the list of speakers, we have Google Cloud, we have Skybridge Capital, we have Actis, one of the big financial standards, we have Onyx with JP Morgan, we have Casper Labs, we have the Bank of International Settlements, IBM, UBS, and more. Next up, for anybody that has a Ledger cold wallet in this recent hack. So recently, a former Ledger employee fell victim to a phishing attack that gained access to this account right here. The attacker published a malicious version of the Ledger Connect kit, affecting a variety of versions, and this malicious code used a rogue Wallet Connect project to reroute funds to a hacker wallet. This right here is a big no-no and a huge concern. Ledger's technology and security teams were alerted, and a fix was deployed within 40 minutes of Ledger becoming aware, still too long. And the malicious file was live for around 5 hours, wow. However, we believe the window where funds were drained was limited to a period of less than 2 hours. Ledger coordinated with Wallet Connect to quickly disable the rogue project. The genuine and verified Ledger Connect Kit version 1.18 is now propagating and is safe. So Ledger and their partners found the bad actor's wallet address, and the address is now visible on Chainalysis. And Tether has frozen the bad actor's USDT. Wow, sounds very decentralized. We remind you to always clear sign with your Ledger. What you see on the Ledger screen is what you actually sign. If you still need the blind sign, use an additional Ledger Mint wallet or parse your transaction manually. They're working with any customers whose funds might have been affected and working proactively to help those individuals at that time. They better get their money back. We're studying the exploit in order to avoid further attacks. And a few days ago, Ledger said the Ledger Connect kit is now safe to use, and all the dApps are safe to use. And there's no such thing as perfect security. Security is like an onion, you just have to add multiple layers. So best practices, in my opinion, is understanding that no wallet is safe, whether it's cold storage, a hot wallet, a paper wallet, anything in between, nothing is safe. The best thing to do for me personally is not put all of my holdings in a single wallet and just rely on keeping those private keys safe. So just like we may hold a variety of different assets in our portfolio, it's smart to even diversify how you store those assets as well. For me, I never want to rely on a single point of failure for a single wallet address. If I'm playing with that wallet and I accidentally approve a malicious smart contract and allow anything or bad code that I'm not aware of, I could lose all of my funds, so it's not worth the risk. So if you have a Ledger wallet or another cold storage wallet like Descent or Arculus or anything like that, or maybe a paper wallet for XRP or MetaMask, or you leverage a broker that holds it in cold storage, diversifying is key. I know some people may have multiple Ledger wallets, 2 or 3 just in case, but for any serious cold storage holdings, it is not worth the risk to play with Ledger Connect and connect to all these different decentralized applications. It only takes one malicious code or an approval of a smart contract allowance to potentially lose all of your funds. So when I have assets in cold storage, whether it's Ledger or any other cold storage solution out there, I'm not using that wallet with my big holdings to connect to different dApps that might not be secure. And this is on bithomp.com, however you pronounce it, and this is an OG XRP paper wallet. So I can just generate a new wallet at any time, and you can print this out so you have the deposit address for the XRP ledger, and then right there is your secret key. If any hacker gets the secret key, they have access to move the XRP from that wallet. So there are a variety of cold storage solutions, but some of the security is just so complex, I don't necessarily trust it, and that's why I still diversify. There are other cold storage wallet solutions you can look up. I don't have any affiliate link. We have, Arculus, we have Descent. I know a lot of people like this one, but just please do your own research and look at all the pros and cons. So as far as I understand it regarding the Ledger hack and the Ledger Connect kit, and please correct me if I'm wrong in the comments below, is for anybody that has ever used Ledger Connect, they were at risk to lose all of their funds, which scares the hell out of me. So best practices is for any serious holdings that you have in cold storage, don't be connecting to different airdrops to try to make $2 or $20 with a new token. Don't be connecting or risk connecting to different dApps or unverified links, because it just takes one bad malicious smart contract allowance or approval and you could lose all of your funds. And for any wallet that I'm concerned about or I connected to a dApp and I'm just iffy, I'm not sure if it was 100% secure, I would legitimately create a brand new wallet and transfer my tokens from the old wallet to the new one just to be safe. And every time I'm doing these transfers, I'm always testing with a small sum of money. So let's just say that you had like $5,000 in XRP and I started a new wallet. I would make sure that the address works and that I pasted it correctly, and I would send $5 to make sure it gets to the destination before resending the bulk amount, because it just takes, one bad address or a typo and you can lose all of your funds. So just working slow and steady and taking these steps that are annoying, it's always worth it to have peace of mind. And this goes for MetaMask as well. If you've connected to different swaps or DEXs, or maybe even a fake Uniswap, yes, there are tools and platforms where you can revoke access, but for me, I don't even trust that at this point after seeing all of this recent news, so I'd much rather just start a brand new wallet and secure those private keys as best as I can. Now, regarding institutional cold storage with organizations like Fireblocks, they're much more secure. It's nearly impossible to actually hack them because these assets are held in cold storage and it takes multiple keys and signatures to even move the funds. So that's one reason why I use Caleb and Brown linked in the video description, and because I feel there's not a chance they're going to get my funds. And the majority of hacks that we've seen over the past few years for institutional users was hot wallets, which are easier to hack than cold storage. Next up, we have a new Bitcoin ETF commercial by Bitwise, one of the applicants applying for a spot Bitcoin ETF.
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
So whether or not you think the Bitcoin spot ETF is going to be approved in the next few months to create the next big bull run, it's going to be approved regardless within the next 2 years in my opinion. Both the Bitcoin and the Ethereum spot ETF are just a matter of time. It's not if, it's just when, and this will pave the way for other assets in the top 10, top 20 to have ETFs. I retweeted this video. This is the Chief Legal and Compliance Officer over at Fireblocks sitting down with CNBC and talking about the future of Web3, digital assets, etc., and just talking about mass adoption and how the United States, just like we've seen over the past few years, is at risk of falling behind. But he talks about other jurisdictions, Singapore, Japan, the UAE, the UK, all moving forward with virtual asset service providers, VASPs, and crypto frameworks and regulatory bodies, which is huge. Remember the 2023 Crypto Oasis report in the UAE. We have Algorand, Hedera, Ripple, Casper, XDC, Polygon, Polkadot, and many other organizations. So we have these global protocols, crypto exchanges, NFT platforms, DeFi, Web3 infrastructure, tech partners, and advisors like IBM, Deloitte, one of the big four, PwC, EY, Oracle, KPMG, and more. Although the US may be falling behind, the UAE is ahead of the curve, and there are so many big things happening out in the Middle East that we have to pay attention to for a variety of digital assets. And last month we covered the approval of XRP, the digital asset under the Dubai Virtual Assets regime. Although crypto and some of these public protocols might seem like a joke in the United States, other countries and jurisdictions are paying close attention. The DIFC, comprised of 72 countries and a GDP of $8 trillion, a combined population of around 3 billion people. Even looking back a few years ago when they first started mentioning all these VASPs or virtual asset service providers, I cannot believe it's already been 3 to 4 years and the US is still doing nothing. Per the Fireblocks interview, they are hoping for some type of stablecoin bill and some other digital asset bills because we need all of that to pave the way to actual regulatory clarity and therefore enterprise adoption at scale. So we have the Bitcoin halving on track to take place during maybe the 3rd week of April, and then coming up in May we have Consensus, the world's largest crypto, blockchain, and Web3 gathering. We can see different sponsors including Stellar, the XRP Ledger, Hedera, Tron, and then a variety of other organizations down below. We have XDC, we have Akash, we have Casper, Chainlink, Kava, Masari. And what's baffling and the biggest head scratcher in the crypto asset class is all the predictions of tokenized assets or globally liquid assets being tokenized in the future, the growth of cross-border payments, the growth of crypto custody. Even Ripple, the company, and Medico right here estimating the institutional crypto custody market is expected to reach $10 trillion by 2030. The past few years have been one of the bumpiest roads I've ever experienced, but I still believe in the future of the crypto asset class, and I believe there's going to be huge winners in the space. And Ripple, the company, put out some predictions for 2024, and we already know today banks are experimenting with tokenized assets and need to be able to do so with confidence inside the framework of strict compliance and security protocols as well as smooth integrations. Our regulatory bodies in the US like the SEC and CFTC think it's simple and they want to classify digital assets as either securities or commodities, but it makes no sense. This type of technology cannot be classified with laws that were made 70 years ago by the SEC. We need new classifications altogether. We're seeing other jurisdictions have utility tokens, they're having payment tokens, security tokens. All of these have a place in the future, And we actually need to see the United States get their act together and put out some new classifications and frameworks. We're hoping for a stablecoin bill in 2024, which would be big. And when we look at other asset classes and all the predictions from some of the biggest names in finance saying the crypto asset class will become a major asset class, we're sitting at just over $1 trillion, and there's a variety of global markets that are sitting at over 100 trillion. So is it that crazy to think in the future we can surpass the previous all-time high of this asset class at 3 trillion, get up to 5 trillion, even 8 trillion? I don't think so. I think the crypto asset class is here to stay. We've seen a variety of market cycles, bull runs, multi-year bear market, bull run, multi-year bear market, and it looks like we're finishing up a multi-year bear market. Whether you think we go into reaccumulation once more or go into an all-time high sooner, I believe in all-time high prices. For at the very least, the Bitcoin price chart and also the altcoin market in the future. We're seeing some alts and assets like Injective, INJ on the right creating a new all-time high price. In 2024, with an approval of the Bitcoin Spot ETF, there would be a huge opportunity in shop for the Bitcoin price chart to create an all-time high price. We've seen some assets, even XRP, wick up to the weekly R2, and there's a variety of assets still down, kind of in accumulation, showing some signs of strength. And this is XLM just side by side. We've seen some assets form this golden cross and go and retrace very nicely, and it wouldn't surprise me to see a variety of alts actually get that strong retracement with that scenario. And comparing the previous 2 cycles, if we do follow history, we have that chance for an all-time high price in 2024. So make sure you have a plan in place when that time comes. We have Merlin linked in the top of the YouTube video description. I'll also add a card to this video so you can go directly to watch that exit plan video. Knowing your exact numbers, how much you have to set aside for taxes, staggering yourselves out at target 1, 2, and 3, and playing with those numbers to understand and better plan for your goals is super important. And you can check out Merlin linked in the video description as well as in the pinned comment and test it out for 30 days free. Preparation is key, so if you're curious about exit plans and how I structure it, be sure to check out the 2 exit plan videos that I have linked in the pinned comment. Thanks so much, guys, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.